Hey, yo, what's up, everybody? What's going on, folks? Welcome to the True Trading Group YouTube channel. My name is Michael Edward Parinati. I go by Michael Edward. I'm the co-founder and head trader of True Trading Group. And in case you guys didn't know, we were a Benzinga FinTech Awards finalist for the best data analysis tool. And we're also the fastest growing and highest rated premium online educational platform that combines university level trading and investing courses with premium stock market tools, live workshops, individual mentorship and coaching for stocks, options, crypto, and futures. We day trade, swing trade. We also cover long-term investing. There's literally something for everybody inside True Trading Group. It's not just me. There's 8 professional full-time trading moderators that are with you each and every single day from pre-market to the close. We're not gone after an hour and you'll have to fend for yourself, giving you all of our commentary, our analysis, answering questions, and telling you exactly when we are entering and exiting positions with order entry prices and executions for you in real time. Now, in case you're wondering why I should listen to anything it is that I discuss on this YouTube channel, folks, I did not figure this stuff out on my own. I began my trading career working at T3 Alpha Fund in New York City as my first job out of college. Then I had to go through an educational training program before they let me touch even $1 of the fund's money. Now you fast forward and I'm the co-founder and head trader of TTG, and along with 8 professional trading moderators and an over 30-person staff, we've helped thousands of members from all over the world reach their goals. We actually have over 10,000 members in 115 different countries. The moderators and I collectively as a group have been able to maintain a cumulative win rate on all of our executions of just around 80%, now going on roughly the last 4 years. So if you guys have not done so, make sure you smash that like button and show some love. Subscribe to the channel. I go live on this channel about usually 5-6 times a week. Actually, this is just a quick little recap video. We had a really busy day on the platform within True Trading Group. We're doing some AI workshops with all of our members and how to implement AI into your trading and into your investing. We have our own proprietary AI tools that are on our platform that we've been showing all of our members how to use to get the most out of it. So a really busy day for us inside True Trading Group and in the community. But wanted to make this recap video. There's some phenomenal lessons. Great day today. Made my money today on Amazon. Amazon to the long. Stock's been relatively strong. Had a really nice move today. And there's a very specific lesson that I want to cover with you. It's a little bit of a triple bottom with relative strength. And that gave me the buy signal today on Amazon and was a really nice trade for us. So we're going to talk about that. We also have a big day coming up tomorrow. It's going to be jobless claims and it's going to be PPI data. Now, the PPI data that you're going to get tomorrow is actually going to be very, very important because the CPI print that we just got yesterday was a little bit hotter than expected, kind of a mixed bag on that number. There were some areas where it was actually higher than what was expected, but it was actually lower than the previous month. So there wasn't enough of an acceleration in that inflation number to really spook the markets. You got to be honest with you, I was surprised yesterday to see the markets move to the upside like they did in the face of that CPI print. I would have thought the markets would have been a little bit weaker than that off of yesterday's number, but the markets were able to kind of shake off a hotter than expected CPI read. Again, the CPI number wasn't terrible, but it also wasn't great. But the market still moved to the upside. This uptrend that we've been in the last 2 months is definitely still intact. And you just got to continue to play this trend until there's a reason for it to break, because we haven't had one yet. Maybe tomorrow's jobless claims and PPI number give us something, a surprise that causes us to break this channel. I probably would say that's not the most likely scenario, but in this market environment, what we've learned over the last couple of years is anything is possible. Rather than try to predict what data points are, I don't do that. If you're on this, watching this video because you want a prediction on what the PPI print's going to be, this ain't it. Okay. I don't try to predict the future. I'm not a psychic. I don't have a time machine. My job is to determine what I think the markets are going to do based on the data points. And I have a very specific, clear game plan on how we're going to make money depending on which one of those scenarios plays out. So if the data comes out X, what do we think the markets do? How do we make money from it? If the data comes out Y, what do we think the markets do? How do we make money from it? That is our job as traders. So that PPI number tomorrow is going to be very important because the CPI print was a little higher. So let's see what the PPI number now has to say. We also have to focus on jobless claims. Jobless claims are going to be important because we just got the U.S. labor report for the month of February last week, and it was a surprise upward move in the unemployment rate. and a revision down in the amount of jobs added. You actually had a revision from January. You had like 353,000 jobs that we said that were added, or 357, 353, that something around that, 350 and change. I forgot the exact number that were supposed to be added in the month of January when the January number came out. And they actually revised that number all the way down to like 120,000 less than what it actually was. And then the unemployment rate went from 3.7 to 3.9. So a bit of an unexpected jump there in the unemployment number. And is that a trend that we're going to start to see? Are you going to start to see now jobless claims numbers start to rise, start to come in hotter than expected? Because that would make the markets a little bit nervous. If you start to see labor market data weaken, the markets probably get nervous. And the reason why they probably get nervous is because that would put the Fed between a rock and a hard place. Because if the labor market starts to weaken, but inflation is still high and sticky, they can't cut rates. And you don't want them to cut rates, to be honest with you. If the Fed had to face a scenario where inflation's not yet where they want it to be, it's sticky, and the labor market is cracking, the Fed will choose 100 times out of 100 to let the labor market crack and fight inflation. Because it's actually easy to fix a weak labor market after you get inflation under control by cutting rates and allowing easy cheap capital to flow back into business and the economy and get, and jumpstart some economic activity. And then all of a sudden people start hiring, companies start to expand, they reinvest. You get a bunch of CapEx going, and all of a sudden that unemployment number starts to come down. But if inflation starts to really accelerate again, that's actually a very, very, very difficult thing for the Fed to kind of put back in the bottle. So that's why they're being very strict here. They're being very stern, rather, maybe a better word, on keeping rates where they are for an extended period of time to ensure that inflation goes down to where they want it to go. So that's why I think these numbers are going to start to be very important. They're going to give us some really good trading opportunities because they're hopefully going to create, some volatility. Tomorrow could be a very volatile day, depending on what these numbers are. So let's dive in. Let's kind of talk about what we expect from those numbers. And then we will also go through the lesson of the day here. You know what? I'll actually go through with you the lesson of the day first on the trade that we made today on Amazon. That's where I made my money today. We'll talk about the lesson. Again, it's two things. It's a triple bottom and it's relative strength. So we'll talk about that first, and then I'll get into what we can expect from PPI and what we can expect from jobless claims numbers. So here's the chart of the SPY. You guys have it up on my screen. You see this upward sloping channel still very much intact. You see every time we get to the bottom end of this channel, it just holds, right? I mean, this has been here now for the last, going all the way back to the first week of 2024, the first week of January, right? You just keep bumping up against this area. You can just see this is just a beautiful, upward sloping channel, right? Beautiful. Makes total sense. We had a nice candle today. It looks like, as long as we don't have any surprises tomorrow on that data, it looks like you're going to get a candle that looks like this tomorrow. But again, we got to see what that data comes in at tomorrow. A lot of economic data coming out that could move this market. Let's go over to the Amazon trade. We'll talk about, what it was about this that we liked. And for me, yesterday was a candle that told me I want to be long this. I want to look to be long the stock today. Now, why did yesterday's candle tell me I want to be long the stock? Because we did a beautiful job of holding this 172 support level. Now, it doesn't take an experienced chart technician or experienced trader to look at this and say, okay, there's 1, there's 2, there's 3, and there's 4 bottoms. So a nice, beautiful support level there created on Amazon. And then you got this nice, strong candle yesterday off of that support level. This candle right here confirms for me this level of support. And that tells me, okay, I want to look to be long. Give me reasons to be long the stock. And then today, now I'll take it to a 3-minute chart, and we'll go over the chart of Amazon. Before I hit the chart of Amazon, let's look at the chart of the SPY. All right. So I'll show you, I'll make it just today's action. So here's just today. This is just today. This is a 3-minute chart. So every candle represents 3 minutes. So right off the opening bell, you'll see that the SPY traded lower for the first 30 minutes of the day. Okay. For the first 30 minutes from open to 10:05 in the morning, Eastern time. So for the first 35 minutes, we traded to the downside on the SPY. new low, new low, new low, new low, continuously making new lows, right? Now, during that exact same time period, we take a look here at Amazon. And there's the first 35 minutes of the trading day on Amazon. Okay, there it is. Now, the first thing that I want you to notice is that there's obviously some pretty strong relative strength, because if I draw a line right across the initial lows of the day, there is a tail here, a tail, tail, tail. Okay, you guys can see all of these bottoms that are getting putting in here on Amazon right up the open. This right here, see this little red candle? That's yesterday. That's excuse me. That is Tuesday's close. Okay, so this green candle right here is the opening candle of today. So here's the low of the day, and I'll zoom in. I'll zoom in a little further just so you guys can see if you're on maybe a smaller screen, right? So now you guys can see this a little bit better. So see, here's the first. This is the opening candle. Tail. Look at this. Look at the bottoms on this, right? See these bottoms? Okay, there it is. So now what you'll notice is that for the first 35 minutes of the day, Amazon's not making new lows. Now, in comparison, we take a look at the SPY in the first 35 minutes and look what the SPY is doing. Literally just making new low after new low after new low, right? You can see we're moving to the downside, making new lows for the first 35 minutes of the day. Okay, right? So we all can see that, right? Making new low after new low after new low. While again, we go back to Amazon, you can see Amazon holding that support level. So that's a key sign of relative strength. Now, at the exact same time that we finally get a bit of a buy signal here on the SPY, and what is that? What is that buy signal? What does it look like? Well, what we can do is we can draw out some price structure here from yesterday. Here's yesterday, nice little support level there. And then prior to that, you had some resistance before you broke through, rallied, pulled back. That resistance became support, pushed back close up at near highs. Today, we drop right down into that exact same level. And I'm going to delete this box just so you guys can see this a little bit more clearly. And then you get this nice bottoming tail with an engulfing candle right next to it. So this candle formation is a bullish candle formation off of this support level. And now, if we expect a bounce in the SPY, which is what we did, we expected a bounce in the SPY after that initial little morning pullback. And the reason for that is, again, the levels that we have here. And hey, we're still looking bullish because of, what we see on the daily chart, right? We're still in this upward sloping trend. So you're staying bullish. You're going with trend. The trend is your friend. So as soon as we got that signal there from the SPY, that, okay, it looks like maybe now maybe the downward movement has stopped, because that's really your first buy signal that you got in the first 35 minutes of the day. So again, here's first 35 minutes. This is really your first buy signal. So right after 10 o'clock, you get that first potential buy signal on the SPY. And at that exact same moment, right after 10 o'clock, what does Amazon do? Amazon puts in this beautiful, let's look at this candle, right? Look at how beautiful this candle is. That's a huge little bottom hammer tail candle. That's also a bullish signal. And considering that Amazon never broke the low of the day while the SPY and the Nasdaq was making new lows for the first 35 minutes, that shows relative strength. And you got a little bit of like a double or triple bottom here, quadruple bottom, whatever you want to call it. Okay, you got one bottom, two, three, right? You're seeing this support level here. So as soon as you get the buy signal on the SPY, you also coincide with a buy signal on Amazon. And that is all we needed to step in there and get long. 175 strike, Friday expiration call option. My order executed 176.02 on the equity. Members in the 175 this Friday, so March 15th expiration call option. Right there's the entry point, right there at 176. And you can see this beautiful move there to the upside on Amazon. And we ended up making new highs here going into later into the day. And we were able to capitalize on this move. And we were able to just take profit, right? We're just taking profits off as we continue to make new highs. And this is a beautiful trade for us. Today, really what this all, and again, what this all really does go back to, it goes back to the relative strength that Amazon showed, and then the actual buy signal. So the relative strength that we're seeing in the first 30 minutes of the day, the relative strength tells us we want to be long. Then that buy signal is the confirmation to actually pull the trigger. And then we go ahead, we pull the trigger, we then go ahead. So I'll just to show you guys again, here was my entry, and then our stop loss is placed right underneath the low of the day. So here's the entry, stop loss at lows, and then bang, you get this nice move. We take profit, right? Locking in that profit, kind of taking out, already 2-to-1s on the trade, right? So already 2-to-1s on the trade. When you're looking at where the stop loss is, we're risking 50 cents, right? We're risking 50 cents, already capitalizing on $1. Okay, so already a 2-to-1. And then you got beautiful follow through here, right? You got beautiful follow through here, giving you another now 3-to-1 on that position. Beautifully done, right? Beautifully done. And this is actually a pretty straightforward and very simple trade setup. It was an easy setup here for us to pull the trigger on. It's a setup that we would go after 100 more times if we go ahead and we see it. And I want to make sure that I shared that with you guys, because this is a lesson that you guys can take with you, right into tomorrow. Maybe it can help you guys make some money, right? Because the reality is, folks, that's why you're here. That's why you're on this YouTube channel. That's why you're watching this video, so that you guys can make money, right? You're not here to watch other people make money. You're here so that you can make money. And with a 78% retention rate at True Trading Group, meaning 78% of our members stay with us after they join. So they've either renewed their annual membership, or they went on to upgrade and became lifetime members of our platform and lifetime members of our community. Okay. 78% of our members do that. We're 5-star rated on Trustpilot with over 2,500 reviews. And we have a refund rate at TTG that's actually less than 2.4%. It means less than 2.4% of our community we issue the refund for. Okay. And we have a double your money back guarantee. So people would be enticed to actually go ahead and get that refund if they needed it, or if they qualified for it, because the double your money back guarantee that we have is actually based on your P&L. So let me explain to you guys actually how this works. When you join True Trading Group, if you go through our courses, pass our quizzes, and attend one study group, we do study groups every week. If you do those 3 things, you can take your time. You have the whole year to do so. It's a year membership. You don't have to do this all within like 14 days. You have the whole year. So take your time, go at your own pace. Go through our courses, pass the quizzes, attend the study group. If you do that and you are unable to make enough winning trades to equal what you've paid for your membership, if you can't do that at least one time, we'll give you back double your money. I'm dead serious. Right? So I'm not stuttering. Your internet connection is just fine. And I can do that because, again, 78% of our members stay with us, and the refund rate at our community and our platform is less than 2.5%. So that's why I have no problem offering double your money back. It's just a way for us to prove to you how much that we believe in this community, in this platform. So listen, if you guys are interested, before we get into PPI and jobless claims, if you guys are interested, do yourself a favor, pull up a new web browser, go to ttgoffer.com. Okay. Pull up ttgoffer.com. We've got a 54% discount that I'm going to give you guys here. The normal price is $1,212 for the year if you would just go to the site on your own. But since you guys are on this channel with me, I'm going to give you a coupon code, but it's only valid until midnight. Okay, so even if you watch this video after it's aired, just go ahead and plug the coupon code in. As long as it works, you're good to go. The coupon code I'm giving you is TTG121. Click apply code. It knocks off 54%. It brings the price down to just $547 for the entire year. What's included for the $547? Glad you asked. Everything on that page, ttgoffer.com, whatever you see there, that's included. No additional cost, no upsell for any of those items. You get our entire 22-course curriculum, which is a simplified and expanded upon version of the training program that I received working at the fund in New York. There's beginner courses, advanced courses, options, swing trading, trader psychology, crypto, you name it. We've got it. You guys have access to it when you join our platform. You're going to get access to 2 private mentor group sessions with our moderators to help speed up your learning curve. Again, there's 8 professional traders that are moderators in TTG that are with you each and every single day. You'll also get the mobile app when you join so that you can Even if you're not in front of your computer, you can follow along with what we're doing. 82% of our members work full-time jobs, work over 40 hours a week. 82%. How do they do that? They use our mobile app. So the mobile app allows you to stay connected to our chat. You can see the screen share on your chat because the moderators and I, we share our screens with you so you can see what we're doing. You see what we're looking at, everything else. We also talk to you on the microphone live throughout the day so you can listen in, you can hear what we're saying. But the best part, the most important part, in my opinion, you get real-time push notifications when our orders execute. So when my order executes and I got long, you're going to get a push notification in real time notifying you that I'm long Amazon. And then when I take profit, you'll get a notification in real time that I'm taking profit on Amazon. So this way you can get a notification, log in, place a trade, set a stop loss, put your phone down. An hour later, your phone goes off again. You pick it up, place the trade, put your phone back down, right? So that's how 82% of our members do that. And you guys have access to that when you join our community for no additional cost. You're going to get access to our watch list every day. The moderators and I, we publish for you watch lists of the stocks we're focused on with detailed entry and exit prices. So you know where to focus and what we plan on doing before the day starts. So we'll tell you like, hey guys, we're looking at Tesla today, short at, 175. Like these are the things that we're going to tell you before the market even opens up. So you guys will be able to see exactly what we're going to be focusing on before the day begins. Okay. So again, go to ttgoffer.com and then use the coupon code TTG121, click apply code. The price will drop from $1,212, 54% off, down to $547 for the entire year. And you have the double your money back guarantee, guys. I don't think you need it, but it's there for peace of mind. If you have any questions at all, just send us a text message, 1-888-306-8783. The phone numbers are right at the bottom of your screen. You have any questions, we're fully transparent. We're an open book at any time. Text that phone number. That's 1-888-306-8783. All right. All right. So let's go back on over to the charts. Let's talk about the PPI numbers that we got coming out here. And just to go over with you guys what some of the expectations are for the PPI number. All right, the PPI number is core PPI month over month is expected at 0.2. Last month it was 0.5. The core PPI year over year is expected at 1.9. Last month it was 2.0. The headline PPI month over month was 0.3, is also expected at 0.3. And here's the weird part. The year over year headline PPI number is expected to be 1.1. Last month it was 0.9. So we're actually anticipating a 0.2% in acceleration increase in the headline PPI number. But 1.1 is a very low number. Right, the CPI number is up in the high threes. So even from 0.9 to 1.1, not really the end of the world. It's the core PPI number that you want to focus on. That's right at 2%, which is what the Fed's target for the core CPI number is 2%. Their target for the PCE number, which is the inflation number that the Fed actually focuses the most on, their target for that is 2%. So we want to pay attention more on the core numbers. Most importantly, that month over month core number is expected 0.2. That is a very low number, month over month core at 0.2 when last month was 0.5. So that's a number we really want to focus on the most, I think. And that core year over year PPI number, 1.9 against last month's 2.0. So showing that there's a real decrease or a deceleration in the PPI, the core PPI number specifically. So core PPI is expected to decelerate from 0.5 to 0.2 on a month-over-month basis, and expected to decelerate from 2.0 to a 1.9 month or year-over-year basis. So those, I think, are the bigger numbers that we got to focus on. And if there's any upward surprise on those numbers, you could get a negative reaction to the downside when it comes to the overall markets. Okay, but if we're left to just trade based on technicals, and if there is no surprise in that PPI number, then folks, don't try to be a hero. Just stay in this channel. Do not try to, Okay, now the channel's going to break. All right, now the channel's going to break. No, now it's going to break. No, now it's going to break. Don't try to predict that break, because you're going to keep losing back to the upside, or you're going to be missing out on opportunities to make money. You just stay with the trend until that trend obviously breaks. And for me, that obvious break of the trend will come when you get a day that looks like that and you break out of the channel. Then it's time for you to then look for, a downward pullback and a move that takes you back to 503.5 is my target. Actually, when this channel breaks, I'll just draw it for you now. When that channel breaks, right here's my target. It's right around 503. That's my target. Okay, it's this previous double top right here. Then you had the gap up. That's NVIDIA earnings day. Then you had that gap up. So to create a nice little support level there. So that's actually my target if and when this channel actually breaks down. We'll be short when that channel does break, and I'll be holding that position until we get down to 503. Okay, so that'll be the game plan there. But that hasn't happened yet. Does tomorrow's PPI number and jobless claims number, does that break it? Maybe. What would we need for that to happen? You would need significantly higher jobless claims number than what's expected. And I think you need significantly higher core PPI number in order for that to happen tomorrow. So can it happen? Sure. If it does, numbers come out at 8:30 a.m. Eastern. We'll be live with our members when that happens to walk them through and guide them through and give the analysis. So we'll be there for it. And we'll see. We'll see if maybe we can find some more trade setups like we found in Amazon today. It was a beautiful day. All right. Good luck, folks. For those of you that are not members of True Trading Group, for those of you that are interested, make sure you go to ttgoffer.com. Use that coupon code TTG121. Click apply code. Then the price drops down to just $547 for the whole year. You get access to everything that is on that page. No upsells for anything listed on that page. And then you have the double your money back guarantee for peace of mind. And again, I don't think you need it, considering our refund rate's less than 2.5%, and our retention rate is 78%. The double your money back guarantee, it's right there on the checkout page. It's in black and white. Yes, it's real. Just go read it. Again, if you can make enough winning trades to equal $547 at least one time during your membership, after going through our courses, passing our quizzes, and attending one study group, we'll give you back $1,094. That's the deal. That's the promise when you join True Trading Group. All right. So any questions, just text us 1-888-306-8783. Thanks for tuning in tonight, folks. I hope you guys enjoyed the stream. Congrats on my members that capitalized on the Amazon trade today. I know many of you really nailed it and had a great day. Let's keep that momentum going. Let's finish the week strong. Big day tomorrow. I'll see you guys all in chat.